watching Business Today Television. I'm Sakshi, Batra, and this is a special earnings edition where our focus is on the GE Shipping Company for its earnings. Remember, the company has recorded a 25.3% growth in its consolidated profit after tax for Q4 at 905 odd crores. The consolidated revenues have also risen to 1726 crores from 1550 crore rupees reported a year ago as well. Joining in to discuss and to detail for us some of the key earnings from this quarter as far as the outlook is also concerned, I am now joined by a very special person. The top management of the company joins in. Mr. G. Shivakumar, the Executive Director and the Group CFO, is now with us. Warm welcome to you, sir, on Business Today Television. It's good to have you with us. Very strong set of earnings coming in for you, so congratulations on that front, especially the revenue which is coming at a multi-quarter high for you. Could you begin by telling our viewers what really contributed to your top line in this quarter and what is the way forward?
Good morning, Sakshi. Thank you for having me. The revenue went up in this quarter. Traditionally, the Jan to March quarter is the strongest quarter of the year for tankers, and because of seasonality. Tankers are the large part of our business in the shipping side. So what's happened is that that tankers earned better than they did in the previous quarter. Typically, also dry bulk, which is about a third of our business, of the number of ships, tend to have a weak quarter in Jan-March, but they had a much better quarter than the previous year. And that was unusual. And that contributed again to an improvement in the earnings. On the offshore business, we had one rig which got repriced from an old 3-year contract to a new one, and where the market the rates are going up quite rapidly, and that reflected again in the improvement in revenues. Along with that, of course, we have the offshore supply vessels, all of which every time they get repriced are earning higher revenues.
Okay. The other important factor was that the margins have also improved for you. How do you see FY25 really panning out for you, sir? Will there be enough and more levers for you to look at upgrading this margin band?
Not really in margins, but let's look at what could go into this. In the offshore business, the answer is probably yes, because we are going to have rates, which are the earnings rates, which is dollars per day, going up on the repricings. And therefore, you could have an improvement there. The costs are more or less fixed. So any improvement in the top line results in an improvement in the margins. On the shipping side, we expect the markets to stay strong. We don't know what it'll be that takes the markets up further, which is where the freight rate, which is say $30,000 a day, what can take it to $32,000, $33,000, $35,000 a day? We don't see that trigger. However, we didn't see the trigger in November, where the Red Sea issues that we've had for the last 4 months took the markets up a step. So these disruptions can happen anytime, and those could take up the margins. But again, those are not something that you can forecast or price into any forecast. So we don't see how it can go up in a big way, but we expect markets to remain strong for the shipping business and to improve for the offshore business.
Right. So what's the outlook on the offshore business for FY25, sir? How do you see that panning out?
We expect rates to keep improving. Every vessel that gets repriced sees an improvement in pricing. These are typically 3-year contracts. Sees an improvement, significant improvement in pricing, between 50 and 100% improvement in pricing. That's in dollars per day. And therefore, we should have an improvement in profitability on the offshore side. That business has been through a terrible patch from 2016 to 2022, where it was making losses because of the way the market was. And it seems to have bottomed out, and it's now back on the recovery path. And therefore, that should have improved margins and profits.
Okay. So could you detail a little bit on the order book side for us? How is, where are you at, and where is the pipeline headed for FY25?
So on the shipping side, when I take it, when you're referring to order book, you're referring to our fixed rate contracts.
Yes.
We don't do too many fixed rate contracts. Typically, 80% of our capacity, any 12 months forward, is on floating rates, and only 15 to 20% is on fixed rates.
Okay.
However, we are seeing that wherever we are repricing the fixed rate, or we've repriced the fixed rates recently for 3 of our LPG ships, all of which are significant improvements on their previous rates. And these are 3 contracts. On the spot rates, we just don't know because it's a very volatile market. As I said, we try to keep that capacity open because that's how you maximize profitability. So it's difficult to forecast that. All we can say is that we expect markets to remain strong for at least for the next few quarters,
Okay.
absent any macro risks.
Okay, sir. So what about fleet addition? Are you looking at any in FY25?
The recent transactions we've done have all been replacements, just modernization transactions. The market is the prices of ships are very high because of the markets being so strong. We are not very comfortable buying at these levels, taking a net exposure in terms of number of ships. So what we are doing is we are just switching out of our older ships and buying newer ships. So we're just doing a modernization. We have a lot of financial capacity to do capex. However, we are going to save up that capacity. We are long-term players, and therefore we are willing to save up that capacity, the financial capacity, to expand when the prices are at our comfort levels. We think that it's better to be patient at this stage. So, based on the market outlook, we may not get opportunities to do capex in this year, but we'll wait for the right opportunity. We've seen cycles come and go, and we will just wait for the right time in the cycle to invest because that's really what enables us to make superior returns.
Absolutely. But sir, your utilization rate, is it still at 100% or has it? Okay.
Yes, yes, absolutely. Ships are utilized all the time. So ships are always busy and always on hire, except for 1 or 2 days in between voyages. Otherwise, ships are busy all the time.
Okay, sir. And anything with respect to the Middle East crisis that has resulted in any kind of a concern?
No, it hasn't resulted in a concern. It's resulted in the markets becoming tighter. Otherwise, it hasn't resulted in any concerns. We'll have to see how these geopolitics play out. And what we do is that we don't know if it will be a positive or a negative. We ensure that if it's going to have a positive impact on the markets, we have enough capacity to take advantage of it. If it's going to have a significant negative impact on the market, we have enough financial strength to bear any negative shock. And not just to bear a negative shock, we will be in the market to buy if there is a negative shock and markets go down.
Okay. So on the gross debt front also, that has also declined for you. How do you see the picture looking for FY25?
We have repayments in FY25. So we have about $100 million in the group of repayments in FY25, which is scheduled repayments. We will pay them down. We might think of prepaying some debts if we can. Some of these we just don't have the ability to prepay, though we have a lot of money. So we will be paying down as per the schedule, and where possible, we will try to prepay as well. We are net cash in the sense that in the group we have much more cash than we have debt. So yes, it makes sense to prepay the debt, but sometimes it's just not possible.
Okay. So finally on FY25 basis, what's the kind of profitability figure that you would be looking at internally?
Yeah, we don't have a number. We don't forecast. As I said, we have 80% fixed in the open to the spot market, which means that the predictability of results is very low. And therefore, we don't forecast and we don't give guidance. All we can say is we feel the markets will remain strong. And on the offshore side, we expect profitability to improve going forward.
All right, sir. Well, thank you so much for sharing all these wonderful insights and all the very best to you for the upcoming quarters. Yes, hoping that we can catch up again to really understand more about the industry trends and the company's vision going forward.
Thank you, Sakshi.
Thank you so much, sir. And with that, viewers, we wrap up this very special conversation with GE Shipping. Remember, very strong earnings coming through and the confidence of the management on a continued improvement and profitability going forward in FY25 as well. Positive levers for that one too.